is Commodity Wrap. We're halfway through the week, and usually that just means Wednesday, right? But no, we're actually halfway through the week, 50% through a 4-week trading week because Monday was a holiday. Guy that's here to help us celebrate the halftime. I guess he's the star of the halftime show. It's Brian Hoops. Brian is president of Midwest Market Solutions. I bet you've never been introduced as the halftime talent, have you?
No, I can say, Tony, I've never have. So,
well, I'm so glad we were able to get that done today. You know, when we look at how things kind of shook out at the end of the session on Wednesday, equities in higher territory. We go over to like WTI, and we saw gains there as well. Gasoline futures under a bit of pressure. Nat gas, if I'm correct here, nat gas has now been up 8 consecutive days. So, you know, as we kind of talk about before we get into the row crop stuff, there's some movement in outside markets.
There is. There's a lot of markets really on the move here. I'm a little surprised that natural gas is sustaining these gains. The forecasts do call for a warm-up next week across most of the Midwest, but then maybe March going to get a little colder once again. But crude oil's well off of its session highs, and kind of similar to what happened with our grains. So you can say almost all these grains off of session highs as well by the closing bell.
All right, so let's just go ahead and go there through the grain action. Corn in the red, losing, if we're talking the D's, the new crop, losses weren't quite as deep as we saw in the old crop. But anyway, penny to 5 cents lower, about 5 to 6 lower on beans. Meal higher, while soy oil moving lower. And then the wheat market, we saw some double-digit losses there. So what are we seeing in the row crops?
Yeah, a lot of very little news. You know, we talked this morning that Friday's option, and there just isn't all that much other news for us to really talk about today. We had Taiwan buying some corn overnight. Probably the biggest thing is the weather remains very favorable for South America for harvesting of the crop, for growing, finishing out the corn and soybean crops in Argentina, and we should be getting some rain according to the forecast for where they're starting to plant the second crop of corn. And that second corn crop, that's the most important crop. That's the safrinha crop. That's the one that is 80% of what they produce. And so that's going to be very important, I think. So, yeah, we're definitely watching what's happening with South America as far as growing conditions, and they look very good. Any little slowdown in demand, I think, is negative, especially for the soybean market. And the market really, corn, soybeans, and wheat, have really been buoyed and pushed to new highs almost exclusively on the strength of fund buying. And if that fund buying starts to be diminished, dries up at any point, we could see more of a healthy correction as we go into first notice day next week.
All right. I'm going to throw these into the outsides as well. Since things were fairly quiet in our major commodities there, cotton market back in the red, which it's been there. I guess you could say the 25% year-over-year loss means that we've seen it in the red more than we're seeing it in positive territory. But some of the others, again, ones that we may not trade, but kind of interesting, cocoa market lower, orange juice lower, but the coffee market, again, just kind of continues its rally. Is that a weather market?
I think at this point in time it is. You know, I don't study the coffee fundamentals or the growing season all that closely, but yeah, I have to believe that it's a situation where the supply of coffee is being diminished in here, and you know, we've seen. I'm sure there's a lot of consumption, a lot of demand, but prices moving to this level over the $410 area for the May contract. before harvest begins. I think that's definitely telling us that there is some supply issues, and we've traded well over 20 here in the last several weeks. So that market, despite ideas that maybe we were petering out in the 300 to 340 range, certainly not the case.
Well, and before we go to break, what happened with some of the other markets? Well, sugar was higher. Lumber has kind of been on a tear higher. Sugar as well. Sugar's gained nearly 14% month over month. Lumber is up, over 4% month over month, hitting highs that we haven't seen since 2022. And again, pretty impressive when you look at what's happened in that lumber market. All right, now that we're through some of these outside markets, we'll take a break. We'll come back and we'll talk livestock futures with Brian Hoobs. This is Commodity Wrap. This is Commodity Wrap. Second segment here with Brian Hoobs. Brian is President, Midwest Market Solutions. Had an interesting discussion in some of the outside markets earlier, Brian, and in part because just doesn't seem like there's a whole lot of news, at least right now, to trade on when it comes to the row crops. But we stop and start looking at what's happening in these livestock futures into the session. Live cattle higher, feeders lower, and hogs lower. And I guess we should start with the cattle market, but I'm kind of drawn over to this hog market simply because we saw that April contract actually settling below $90. Is that a breakthrough? Is there some concern that we could be going lower?
I think we gapped lower this morning, and hogs are traded so technical. So much of what they do is technically driven. So when we gap lower this morning, I think that was kind of a signal to people that have been buying over the last 4 days, that all those longs that they had bought, hogs gapped lower on last Wednesday, a week from today. They gapped higher, and then they've traded up in those areas above $93 to $94 all up until this morning. So they gapped lower. That was a signal probably to get out of a lot of those gaps. And, if you want to trade hogs, I think you got to watch the charts closely, because there was an open chart gap from February the 4th and the 5th that we went and filled today. Now, that doesn't mean that the bloodletting is all done. You could see some more, and probably will see some follow-through tomorrow morning. But we left that gap this morning, and at some point we're probably going to go back up and fill that gap, especially on those deferred contracts. So we're still in an uptrend by definition. But, hogs can change pretty quickly because they are focused on what the technicals are telling the trade, rather than trying to look at any specific supply-demand fundamentals.
Yeah, a lot of action in that April contract, volume at 34,754. Then you come over and look at what happened in live cattle, higher close there with the most active contract, I guess, the April with over 17,500 on the volume, 10.5 on the June contract, as June settled at 190.92, gaining a little over half a dollar. Deferreds August, October up over 30. Again, that front month for live cattle we've been watching. Will we be able to actually converge with cash cattle?
Well, that's the hope, that we will eventually converge February against that cash market. Now, the cash is called really no better than steady this week, but even so, even if we pull back a little bit in the cash markets, futures are still a discount, and we may drop the cash back to 200, but I could certainly see that February cattle contract by next week rallying a couple dollars to get close to 200 as well. So I don't think we're in any type of a situation where we can't converge that market. I'm sure we will, and I think we're probably, if we do rally, going to be led higher by the April contract, just because the volume and the open interest is all shifted over to the April contract, and funds are going to go back into buying something. I don't think they buy February, they buy the April.
And speaking of April feeders losing about a half buck, 268.60. It's not the most active, but right up there with the March contract that lost 70 to settle at 269.02. Thoughts on feeders?
Well, we had a little bit of a news announcement yesterday that there was another case of screw worm found in Mexico. And there was some thoughts, or at least some hope anyway, that would lead to the border being closed once again. We saw feeders gain over 300 points yesterday on that rumors or those ideas. Now, the USDA said this morning they will not ban imports over this case, and so the border is going to remain open. Feeders gave back a portion of that, not all of it by any means, but they did give back some of it, just because maybe we got a little overdone yesterday. But the biggest bullish case that we have for the feeder cattle market, in my opinion, is the discount to the index. That index continues to march its way higher, up to about 278.5. So we're still $8.50, almost $9 premium over the futures market with today's close. That's usually when you get to $9 or $10, that's usually friendly and usually a buying opportunity, because we don't really see that the cash markets are going to come down anytime soon.
Brian, if we want to visit with you a little further, go in depth on, let's say, the cocoa or coffee markets, or the ones we talk about a little more often, how do we find you?
Yeah, we can talk about any of those markets. Client might talk more than I would about some of them, but my number is 605-660-1155. We have a list of our offices at our website, which is MidwestMarketSolutions.com.
Brian Hoops, President, Midwest Market Solutions on Commodity Rest.